the last week or two. But I thought I'd, stock of the day, have a look at Charter Hall, the big property developer and manager. First half profit fell 56% to $226.5 million, yet it reaffirmed its full-year earnings guidance. The group's preferred measure of operating earnings totaled $240 million, 9% down on the previous corresponding period, reflecting earnings per share post-tax of almost 51 cents, a decline of 10%, revenue down 16%. Charter Hall Managing Director and Chief Executive David Harrison says the focus remains on curating sustainable and resilient portfolios that deliver earnings growth for investors through all market conditions. Charter Hall, bit of a favourite of the market in terms of that REIT fund manager space. We've got the Charter Hall Long Whale Fund coming up later in the program for the guys to take a look at. But David Lane, Charter Hall, I thought is a pretty good bellwether of that property manager sector. What did you think of the result, and is it really a warning sign?
Well, the result was actually a little bit better than expectations, to be honest, although obviously the headline result was negative. But as far as consensus forecasts are concerned, that the market was expecting it to be worse than that. So, they actually beat consensus forecast by about 13%. So I'm a little bit surprised by
why did it get smashed on the market?
Yeah, surprised by that, to be honest, because as you said, their outlook is still reasonably positive. So I think obviously that the market, is in the phase of, expecting that the property sector is going to get worse, whereas their result didn't necessarily indicate that. We've got a hold recommendation on it, but without preempting the analysts' views, I suppose, may well have a look at recommending it. Our fair value on the stock is $15.85, so it's about 16% below that at the moment. So. Yes. Maybe today's share price reaction is a bit of an overreaction and could well be a reason to look at buying the stock. They maintain their dividend, distribution is fairly positive, and overall they do have very low gearing as far as this actual entity is concerned. And it, as you said, is more the funds manager, so it holds, gets a lot of income from their property. Gearing's only about 3%, so I think it's probably looking reasonably attractive at current levels.
Okay, Brodie, what do you think of Charter Hall, the result and the stock at these levels?
Gonna have to agree on that one. Look, it's pretty big movement for such a stable business. Yeah. Obviously, you're getting exposure to the management group as opposed to the actual investment trusts as well. But I think if you just look at their clientele, it's about as blue chip as it gets. 20% of their business is leased through the Australian government. You've got names like Wesfarmers, Coles, Woolies, etc. as well. So, I mean, these are the types of businesses. They're not going to move if the rents go up. They've got deep enough pockets that they'll just pay more. So not too many concerns about sort of the vacancy rates ballooning here. Look, just with today's result, bit of a surprise. I didn't think it was too much of a bad result as well. So comfortable to hold this one if you're in it, despite today's movement. I think if you're long term, you're pretty comfortable in the space. There's going to be sort of periods where it just heads up and down. And if you're looking for a buy, maybe just hold off a little bit longer. It's coming back down into that range where you're comfortable to start to accumulate it as well. So look, just wait for the dust to settle on the back of the report. And if you can pick it up at a good level, I'm comfortable to do that as well.